Hello, everyone. Welcome to another episode of In Conversation by Advisor Coach. Today, in conversation, our guest once again is Mr. Mohit Bhatia, Chief Executive Officer with Bank of India Mutual Fund. Welcome, Mohit, once again to In Conversation.
Thanks, Suren. Thanks for having me here and talk to you on Advisor Coach platform. Very happy to be talking to you and to the viewers of your platform. Yeah.
Thank you very much. Always a pleasure. So, Mohit, Bank of India Mutual Fund is launching their Bank of India Midcap Fund new fund offer on the 31st of July and closing on the 14th of August. So, could you tell our viewers more about this new fund offer?
Yeah. So, Suren, yeah, we're really very excited about this new NFO because
Hmm,
this is one of the few core category products, or
hmm,
probably the only core category product that was missing in our portfolio bouquet of schemes that we've had at Bank of India Mutual Fund. And while we've been managing mid caps as part of our existing portfolio, so for example, in flexi cap, multi asset, hybrid funds, we've been having mid cap exposure to the tune of about 22% of our overall 10,000 crore equity book. This is a pure mid cap fund, and so it's been there in the waiting for some time. And while timing is not something that I would like to recommend for retail investors, but I do think that given the moderation and the corrections that the markets have seen in general, and the mid and small cap, in particular over the last 1 year, I think this is quite a nice time to really start off
hmm,
building a new portfolio on the mid cap side. And
hmm,
like I said, we've been waiting to go ahead with this proposition, and so therefore we are launching it now, starting from 31st July. The NFO period extends till
hmm,
14th of August.
hmm,
And as part of the mandated allocation, minimum 65% of the portfolio has to be in mid cap companies, which is companies from the 101st to the 250th company
hmm,
in order
hmm,
of market capitalization. But I expect this to be at least 70 to 85% in mid caps, and the balance 15 to 25% from time to time will be in large caps slash small caps,
hmm.
given how we are looking at the medium term assessment of valuation metrics, opportunities, risk scenario. Also. And what we strongly feel is, given the strong growth that we've seen in the Indian markets in the past, and also the strong structural story that India
Hmm.
presents for investors, domestically as well as for international investors. We believe a few changes that have happened in India
Hmm.
and are continuing to happen or unfold
Hmm.
are really laying down the foundation in a nice way for the next 2 decades to be really
Hmm.
good
Hmm.
for the Indian equity market, especially as we move to the Atma Nirbhar Bharat stage into 2047.
Sure.
And so I would like to cite these three big developments, which is structural reforms, uh, demographic strengths, and strategic investments that are happening. So the first one being, the stability on the macroeconomic front in terms of macroeconomic policies, ease of doing business, global trade integration, in which India
Hmm.
has really been playing an important part, an
Hmm.
important
Hmm.
role
Hmm.
as a market as well as the participant in supply chains that are getting realigned.
Sure. Sure.
uh, GST, RERA, manufacturing PLI. So all these are structural reforms which are unlocking a lot of opportunities for Indian entrepreneurs and companies. Demographic strength is something that we've known for the last 3 decades about India,
Hmm.
and is really kind of shaping up as the per capita income is on the rise. And third, strategic investments that are happening, huge public capex by the government,
Of course. Yeah. Hmm.
that investment, as well as the digital public infra. I
Hmm.
think the jam trinity, which has been long spoken about, Jandhan, Aadhaar, and mobile, I think is really something that we've talked so much about it, that and we are seeing that impact unfold in a very big way. So these three big, I would say, macro developments in the Indian environment is what is leading to, I would say, efficiency, uh, and efficiency building up in corporates. As
Sure.
it is, the Indian corporates have one of the best ROEs, probably the second best ROE, globally amongst corporates after the US. So while all this is a great, development for larger companies, but for mid-sized companies, these are going to be game changers. I think
Hmm.
move ahead as the Indian equity markets expand, the equity culture of investing in equities expands in India. I think mid-sized companies, because of these three macro developments, are going to be very, very big
Hmm.
beneficial game
Sure.
changer.
Sure.
And therefore, this product is also seen as an opportunity to participate, in how these mid-cap companies, continue to grow and flourish in
Hmm.
this very conducive environment over the next couple of decades.
Sure.
So that's the opportunity. Like I said, a mid cap fund primarily invests in mid cap companies, companies from the 101st to the 250th company. So about 70 to 85% portfolio in that. 15 to 25% in small and mid cap, large cap companies, depending on the opportunities that we see.
Sure.
We feel it's a great time to build up the mid cap portfolio as has ever been, and this segment is going to see a strong demand.
Sure. 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 So could you also highlight something about its investment strategy and what kind of, how many number of stocks this portfolio will hold?
Yeah. Suren, while like I said, this is a core strategy fund. So obviously the portfolio primarily comprises of mid cap companies as per the classification,
Hmm.
given on the regulatory side, which is
Hmm.
the 101st to 250th company. I would like to, also mention something about the way we are going to be managing it.
Hmm.
Okay, and obviously, people want to look for differentiators, but yes,
Hmm.
I think every fund would have its
Hmm.
USP. Every
Hmm.
scheme has its USP. In this case, I would like to emphasize that this is a purely bottoms up stock selection approach that we're going to follow here, and sector allocation is going to be more a consequence of
Sure.
the stocks that are selected in this fund. So in that sense, you kind of get to see the best of the house selections, the fund house selections in terms of mid cap
Sure.
companies that we get here. Second is also that we will be, evaluating companies which have been at the lower end of the mid caps, some of the out of favor mid cap stocks, newer additions from the small cap to mid caps, and some of these less researched companies. So
Hmm.
you would see that the sell side maybe the less coverage, there may be less
Sure.
coverage on a
Hmm.
lot of these companies,
Hmm. Hmm.
and we believe that some of these out of favor companies, with improving financials, ROEs, balance sheets, could also offer great opportunities going ahead. So in terms of number of stocks, we plan
Hmm.
to hold about 55 to 60 stocks,
Hmm.
you know, and the asset allocation I already described predominantly in
Yeah. Yeah.
companies.
Sure.
So that's how we see it. And there are again three micro aspects, which I wanted to highlight, because, like I said, we are very excited about launching the mid cap
Hmm. Hmm.
product at
Hmm.
this time, because we clearly feel, given the past data, what we've seen is that mid caps seem to have outperformed the large caps
Hmm.
in the Indian context, even the small caps over a longer period of time.
That's true.
The risk-adjusted returns have been fairly good,
Hmm.
so, in terms
Yes.
of vehicles for wealth creation in the long term, these have really stood out. And I just also wanted to highlight something through a slide, if you may allow me to just share
Sure.
a couple of visuals here.
Sure.
Is this visible
Yes,
now?
it is. It is.
Okay, so what I'm trying to highlight here is the fact that if you see, these are companies which are typically companies which have significant growth potential and already have established a track record. So the vulnerabilities to the business which a small cap company would have are, typically have been uh, behind such companies. And while they are prone to high risk, but yet these are companies which have kind of emerged as challengers to the market leaders in some of these established sectors, and in businesses such as sunrise sectors or new emerging businesses. These are quickly emerging as the market leaders, right? So this is a space which we think is going to be, as entrepreneurship and, like I said, those three big macro initiatives
Hmm.
fold in India.
Hmm.
You will see a lot of these mid-sized companies become popular with investors,
Sure.
institutional and retail investors, because of the high quality of earnings that these companies are likely to deliver. Okay,
Hmm.
so I was also talking to you about the potential, and again, my disclaimer here is that the past may never be repeated exactly, but it is a good indicator of what this segment has
Hmm.
done
Hmm.
over the past long term, actually, right?
Hmm.
So here we picked up the data for the last 20 years.
Hmm.
What you see in this slide is uh, the returns over last 20 years on the index. Basically, if you look at the small
Hmm.
cap, Nifty small cap 250 TRI, the Nifty mid cap 150 TRI, and the Nifty 100 TRI. The blue segment, or the blue line, represents uh, the growth in the mid cap Nifty, which has been almost 27 times,
Hmm.
compared to uh, 21 times in the case of small cap and 16 times in case of a large cap. Of course,
Very
this is
interesting
a
slide.
representation by looking at the growth in the indices
Hmm.
representing these segments. But obviously, it gives you a fairly good idea of the potential that lies in each of these segments. Okay.
Sure.
And like I was saying, it is not just true in India, but also in the US, for example, which is one of the most watched markets. You will notice that here, over the last 35 years, from December 1990,
Hmm.
see the performance of the large cap S&P 100 and
Hmm.
the mid cap S&P 400. You see that in these 35 years or 34 years, the mid cap index has gone up almost 30 times compared to the large cap index, which has gone up 18 times. So then the question would be that, why do you really look at large caps if you have mid caps, right? So the answer to that is, there is volatility or risk which is higher in mid caps compared to large caps. But what we've also done is try to capture in this particular visual, where you see that over a longer holding period, as you move, in mid cap investments, you will see that the volatility as represented by the standard deviation, tends
Hmm.
to reduce. So if
Sure.
you see, and of course, large caps have much lesser volatility or standard deviation compared to the mid caps. But what this clearly shows is that, if you have the investment horizon of 5 to 10 years and beyond, then your volatility becomes comparable to what you will see in large caps, and yet the difference in returns is going to be about 3 to 4% CAGR,
Hmm.
as
Yeah.
shown out by the past returns. Again, like I'm saying, my disclaimer here is that the past may not repeat in the future, but then you must have an idea of how this particular segment has performed over the long term, right?
Hmm.
So that is something that I wanted to share with you in terms of the potential.
Sure.
Okay. And so, three reasons I would think right now, in terms of the macro aspects we discussed about how Indian markets, are really, going to be big beneficiaries of structural reforms, demographic strengths of India, and the strategic investments being made in the physical and the digital infrastructure. On the micro aspect, we see that the mid cap segment is really going to be benefiting, because, uh, you know we think these companies really comprise, this set really comprises challengers and emerging names which are giving close competition
Hmm.
to large players in the
Hmm.
segment on account of technology and productivity gains
Hmm.
that are happening. Right? We've
Hmm.
seen that
Hmm.
in a huge way. Okay, and also only way to take exposure to some emerging business segments, right? So if you are looking at exposure to a lot of sectors like textiles, capital goods, retail financial services, asset
Hmm.
management companies included,
Hmm.
insurance, stock exchanges or credit rating agencies. So, you will not find enough exposure through a large cap index or a large cap fund. So, this is a segment that you would want to invest in if you want to get exposure to some of these sectors. From a demand supply aspect, also, we believe that since there are only 150 companies in the ecosystem which currently comprise the mid cap segment, and because we are seeing this big mega trend of financialization of savings, capital market investments as a culture picking up in India, there is going to be a healthy demand supply, we believe, gap in this particular segment, especially because, like I said, people with long term investment horizon do look at part of their portfolio allocations into mid caps.
Sure.
And given the limited set of companies that exist in this segment today, there is obviously good demand supply equation in terms of segment of companies. And also, an important factor here, why mid-cap companies continue to draw attention of investors, especially institutional investors, is because these offer pure play opportunities in businesses which have kind of got established in a way with a track record, and also compared to a conglomerate or a very large company, this has a relatively better visibility on earnings for the next 3 to 5 years.
Hmm.
Say, in case of small caps, for example, the volatility in earnings may be much higher. In large caps, the visibility of earnings in a conglomerate may be a bit difficult to visualize. But in mid caps, a lot of them being pure plays, investors are able to get a better, I would say, line of sight on
Hmm.
earnings for the next 3 5 years.
Sure. Sure.
So that also makes a lot of the institutional investors comfortable with you know, uh,
Sure.
mid
Sure.
cap companies and portfolios. So
Sure.
these three things we think are going to add on to the attraction for investors in terms of investing in mid cap portfolios.
Sure. No, I completely, excuse me. I completely agree with your thoughts because, it's very important to be, participative in the broader markets,
Yeah.
as geoeconomically, of course, and domestically, internationally, how India is gathering a lot of pace in its overall growth momentum. So, Mohit, any new distribution initiatives which you've taken during this NFO, or generally the asset management company, Bank of India Mutual Fund, has taken in the recent past?
So yes, I think while we want to combine the traditional way of doing business with the upcoming,
Hmm.
way in terms of our digital outreach, we think that the physical presence for a smaller fund house like us is important, especially when we built a good track record over the last 15 years.
Hmm.
You know, what we've done is we've combined this in terms of having a higher physical presence, in terms of number of people, servicing the retail point of sales for us, because our distribution empanelments are rising in a
Hmm.
fantastic way, right?
Hmm.
So as people see our processes, long-term performance, we do see, distributor queries for empanelment, and so therefore we've expanded our number of people on the sales side, which is almost double of what we had a year back today. Also in terms of service support, also to deal with the increasing queries on the retail side from our Bank of India distribution
Hmm.
channel, which
Hmm.
is Bank of India is a 100% shareholder, and also helps us with the distribution support, especially on
Sure.
the retail and SIP front. So
Sure.
that system expanding. We are also, I'm very happy and proud to share that on digital side also, the developments have been, very good.
Mm-hmm.
So while currently I would say the focus is on improving functionality, ensuring
Mm-hmm.
there is seamless, facility for investors and distributors to do transactions and get information on our products. We are also very keen, and we are ensuring that wherever mutual funds are getting purchased, or information on mutual funds is being exchanged, we are present on such platforms. So whether it's stock exchanges or B2B and B2C platforms, our marketing and alliances team is ensuring that we are present in these platforms. Besides ensuring that we are, our own digital ecosystem that comprises our mobile app, our distributor app, our own investor portal and catalog site are regularly updated for information
Mm-hmm.
as well as features. So,
Mm-hmm.
and I think Suren, you'll agree that this is an iterative process. There's not like
Mm-hmm.
you can't have it on in one day, but yes, there are constant improvements happening on that. And I'm really proud that we are able to match up with some of the larger players in the market also.
That's
So
great.
some
That's
of the
great.
initiative we've done is enablement for our distribution partners of hard coded ARN, customized ARN links.
Mm-hmm.
So we have, like I said, a presence. We're also trying to, which are routine or standard things, but then being there
Mm-hmm.
at the time when they are needed is important. So customized marketing collateral, concept notes, trainings on the digital front is
Mm-hmm.
something that we are done.
Excellent.
We also launched, because as a firm we believe that the distribution driven approach is the quickest, most efficient and most cost effective way of scaling up. We've also launched a program to improve the quality of engagement with our distributors. So this is
Mm-hmm.
basically called the Bank of India Edge. Edge basically standing for engage, develop, excel. Engage, develop, grow, and excel. So that's
Mm-hmm.
the acronym. So under that, we are doing several initiatives in terms of physical and digital, thought leadership programs, seminars,
Oh, that's great.
trainings,
Mm-hmm.
both in terms of client handling, product concepts, mutual fund concepts,
Mm-hmm.
uh, understanding of macros, and familiarity with our teams. A lot of customer related operational issues, which today become hindrances when first time investors try to invest.
Mm-hmm.
So we are trying to bring it under the umbrella of Bank of India Mutual Fund Edge, which is the umbrella program for our distributors.
Mm-hmm.
That is something that we've just launched, and we'll be expanding initiatives under that.
Excellent. Excellent. So a lot of action has happened.
Yes, we're trying to do that to keep up with so much happening in the market.
Yes, absolutely. So, Mohit, what message would you like to give, to the distribution partners, financial advisors, and investors, through this in conversation today about Bank of India Mutual Fund in particular, and the Bank of India Mid Cap Fund as well, the new fund offer.
Yeah. So, firstly, I'd like to thank all our investors, distribution partners, for the support that has helped us really build up on a lot of these retail parameters. So today,
Hmm.
when we look back 3-5 years, we've kind of from a small SIP book of about 10 crores in 3 years, we now moved up to 100 crore per month coming
Oh,
in
that's brilliant.
SIPs, and this is a lot of retail money. So that I think is really a milestone which we
Hmm.
all quote with pride, though this is small compared to some of the SIP throughputs that you see from the industry players. But yes, we kind of in the right direction we're moving. We're very
Absolutely.
happy about that.
Hmm.
We've also seen our company cross the psychological milestone of 10,000 crores. So we are at 13,000, around 13,000
Wonderful.
crores now. A large part of this being equity and hybrids,
Hmm.
and I would say most of it being retail money. So that really adds to the comfort that we have and our investors and distributors have in terms of sticky money that we have in our.
Sure.
portfolios. We built up a good track record over the last 15 years. It's a very research focused investment process,
Mm-hmm.
and we try to, and our endeavor is to make sure that drawdowns or deep drawdowns are protected through our
Mm-hmm.
focus on managing the concentration and liquidity risk. So, I would like to convey this at this juncture to our investors and distributors that,
Second.
we are moving steadily,
Mm-hmm.
and the investor interest in ensuring that both alpha creation through a research based approach, and also protecting the drawdowns by having a robust risk management system and focusing on liquidity and concentration risk is really, primarily driving our function, and at the same time ensuring that our service outreach both through physical and digital methods is up to the mark, in line with the evolving trends. So we are doing that, and in terms of our product proposition, I'm sure uh, most of our clients and distributors have had a good experience investing in our products in their journey of wealth creation. So I would think that please continue that support and patronage to our products and company. And it's in that vein that we are also trying to bring this new growth opportunity for our investors and distribution partners, which is the mid cap fund, the NFO, for which Bank of India Mid Cap Fund NFO starts from 31st of July till 14th August. And clearly a core segment allocation in terms of equity allocations that investors do. We've already had a good track record of managing this segment, across capitalizations. We've demonstrated a good track record. I would think this is again a great opportunity. And importantly, I think, as I mentioned earlier in the conversation, that India is truly at a juncture where we are seeing the benefit of some of these macro developments unfold,
Mm-hmm.
for the economy and the markets in general, and mid cap segment in particular, where entrepreneurship, new businesses, spin-offs from conglomerates really attract the uh, large and retail investors' attention, because these are businesses which are, like I said, a lot of times pure play, provide good visibility on earnings, run by good entrepreneurs and management, and delivering good sustainable ROEs. So we
Sure.
think this is a great segment to be in. And of course, there are several mid-cap funds from peer group competition, all of them doing well. But I think having had a good track record in managing money across mid, large, small cap segments, we would look for our investor and distributor supporting us in this NFO. And if their risk profile and investment horizon allows them to invest in this, we would strongly urge and request our investors and distributors to look at the Bank of India Mid Cap NFO fund for investment.
Very well. Very
Ren?
well. Great. Fantastic. Thank you for that. So, well, for our viewers, this is Mr. Mohit Bhatia, Chief Executive Officer with Bank of India Mutual Fund, talking about the new fund offer, Bank of India Mid Cap Fund, being launched on 31st of July and closing on the 14th of August 2025. While Mohit took all of us through, the investment strategy and what they believe of the India demographics and why a mid cap fund, and also the newer initiatives which have been taken at Bank of India Mutual Fund in connecting with the distribution partners, investors, and advisors much better. So, well, Mohit, thank you very much for joining in today and taking out time. So we wish you the very, very best for the new fund offer of Bank of India Mid Cap Fund.
Thank you, Suren. Thanks so much for getting me on the platform. Like I said, thanks to Advisor Coach, to all the team members, and to you for having this conversation. Thank you
Always
very
a
much.
pleasure. Thank you very much.